Hi, welcome to the Market Alert for Wednesday, the 11th of October 2017. So starting off yesterday in the pound, the market sideways, there was the one signal, but no movement to the upside until the fourth bar there, and then the market just moving slightly higher. Again, you can see within the main trading session there, the range is about 30 or 40 points, probably 40 down to here without measuring it, just a ballpark figure there. So very, very quiet. In the daily chart of the pound market, you can see is moving back to the upside. Got a bit of a bounce going on at the moment. It's a matter of how far the market will actually move, and the lines that I drew in yesterday haven't been saved, so let me just save that. So yeah, we've got a bit of resistance around at 132.49. Now in the Dow, this is becoming a fascinating picture, also very irritating as well. And if you cast your mind back to last week up until Friday, prior to this, we had seen that there was activity in the first hour of the market, and then we suspended any sort of trading in the second part because the market traded in a range. Now we're back to a situation that we had a few months ago. This is the third day now where there has been absolutely no volatility in the first part of the session, let alone in the remainder of the session, the sort of the mid-afternoon area, which is here, and then the latter part. And the reason for this, excuse me, we've got a situation where we get a bit of volatility as we saw yesterday, but there is no follow through, there is no momentum. The volatility just has fizzled to nothing, and the reason for this is this: there is absolutely no volatility. It's just evaporated. The October realized volatility is now the lowest on record, and when we mean the lowest on record, we're talking about going back to 1928. And this is a problem in that we get no follow through in any of the signals. So my advice for the time being, until this picks up, is just to stand aside, because you're just going to, as the term is, bleed to death slowly, financially that is, because the market isn't doing anything. There's just no volatility. Now, October is notorious for an uptick in the implied volatility. As you can see from this chart, all of the big spikes have come in October, whether it's all the way back to 1928. And you can see at the moment, down at this level, that there's barely any movement. And this is why we're not seeing. So we've gone from being able to grab 20 points in the first part of the session up until the non-farm payroll figures came out on Friday last, and then now we're in a situation where there is no volatility whatsoever. So just going back to the Dow, get the right chart, and having a look at the daily here, you can see the market's managing just to creep up on absolutely no volume whatsoever. This is a really interesting situation. It's a complacency trade. As I've said before, these are the Trump voters in the market. The market going up euphorically, a melt up, parabolic move, whatever you want to call it, tulip mania. And it will end in tears, there's no doubts about it. This is not sustainable. Lows in volatility end badly. They always have, and they always will. All it's going to take is one to decide to get out of this lot. Something will come out of nowhere, and then the rest will follow. The trouble is we don't know when. That is the problem. But until then, the market's going to continue to move higher. As I keep saying, they want the market higher, and now they've found a way of doing it by selling the volatility to the downside, and this allows the market to move to the upside. And just to add to our woes today, we've got Yellen and Co. at 7 p.m. So again, expect the market to do absolutely nothing while it waits for the meeting minutes from last month, which will be absolutely nothing, and then the market will react with absolutely nothing, because that's the way it's become. In times gone by, you would sit waiting for that 1 second to 7 p.m. because you knew the market would break out, the volatility would be fantastic, you'd have 100-point moves. But now you're lucky if you can get 10 points out of an FOMC or non-farm payrolls economic news item, as we saw on Friday. Amazing, absolutely amazing. So if anybody says to me these markets aren't manipulated, they're just fooling themselves, because there's no way you can go from a market several years ago that had its own price discovery mechanism, i.e. people were allowed to participate in it and you would get the volatility, to a situation where volatility is being sold to the downside to give the illusion that everything is fine on the financial, or on as far as the economy is concerned. But there you go, that's what's happening at the moment. And let's just have a look at the volatility in a bit more detail, because it's a fascinating picture that is actually showing here. So starting off with the 3-month chart, you can see the volatility up slightly yesterday, and apparently this is to do with the beta of the futures VIX contract, why we're starting to see this move up. Don't really understand why personally, but I think it's more a case that there are some people out there thinking this can't go on forever. But you can see it's sideways here, but when you go out to further time frames and look at it, this is the 6-month. You can see how sideways this market has been over nearly 12 months from December, how the volatility has not got above 12 during nearly, it's 9 months, where are we? October, 9 months. It's just sideways. And if you look at the 1-year chart, you can start to see how sideways this is, going back to November 16, how we've been all year. The market's moved higher, the volatility's moved lower, there's been the odd spike, but nothing back to these levels that we saw in May and February of 2016. You can see how quiet it has actually been. And this is why I keep these charts on a daily basis, because it's very interesting to see exactly where we are in the bigger picture. And then of course the further you go back, you can see that January 16 was the last time, and then we had the August 24th when the market lost 1,000 points. But since then, January 16, and if you remember going back in the market alerts, I can't give you the precise date, but sometime in February of 2016, Yellen made a call to Draghi and Carney, and that was it. This was it. This was the last major correction we had in this market, and from there on it's just been one way. And you can see how this divergence that we've got here is playing out, and how quiet the volatility has been for the whole of 2017. So the biggest picture of all that I've got is going back 10 years. Let me just adjust this slightly, as you might not be able to see the scale on the right. So you can see there, going all the way back to 2006 here, you can see how the market is way down in these lows, and that's why we're getting no movement on the market. There is a reason behind why it's happening. We know the reason. We know it's manipulation, but it's nice to know why the market isn't actually giving the profits, because there's no momentum, and that's because the volatility is just so low down here in the last 12 months, but in particular through October. So we have this situation where, an unusual situation where the volatility is low in October, where normally it kicks up. And I'm still going to say it, that we could end up leaving October where the volatility does kick up and look completely different to the start of the month. There's plenty of time yet. We're only into the 11th day of October, and an awful lot can happen. We've still got the Korean thing out sitting there on the back burner. There's all sorts of things that could spark this, and as and when they're ready to drop this lot, they will. There's no doubts about that as well. This is not sustainable. You can't have these parabolic moves without some form of correction. Everybody thinks it's different this time. How many times have we heard that during the last 20 plus years? 87, 91 with the Asian problem, and then there was the dot-com in 2000, then 2003 to 2008, different this time. The debts were ran up, and then the toxic mortgages. Now we have the biggest debt problem on record, and it's different this time. We can get out of this. The $4 trillion that the Fed have on the balance sheet isn't a problem. It is a major problem, and it's going to be interesting to see how they're going to unwind that lot as well without causing a problem. So let's wait and see what happens. As I say, Puerto Rico run out of money at the end of October. I don't think that's going to be a big event as they claim either. That's on the 31st of October. I'm sure they'll come up with some sort of solution for that one, just to kick the can down the road once more as well. So it's going to probably take something of a geopolitical nature, something out of left of field, as they say. I particularly like the expression, but that's what is probably going to take something to actually break this market out of its complacency, unless they have something else up their sleeves to dump this lot on the sheep, as they normally do. Right, that will do it for this one, and if there's anything to report, I'll let you know, but expect a quiet one, as the market will wait for the FOMC meetings. But again, as I said earlier, you can predict precisely what's going to happen, unless there is a surprise in there, and I very much doubt that, because even from the live meeting last month, there was no surprises really. Yellen said exactly what the rumours had already been put out into the market with regards to unwinding the $4 trillion on the balance sheet. Right, that's it. As ever, thanks for watching. See you in the next one.